Hello crypto world, welcome to the Chart Historian. My name is Justin, and on this channel I delve deep into crypto charts, exploring chart structures, fractals, and patterns. So today I have the Dow Jones chart open, and I would like to do a follow-up video to my previous video in which I discussed the Dow Jones and how it is repeating a pattern that was started in it started in 1896 and it completed in 1932, and it included the Great Depression, the 1929 crash. I also compared the peak of the 1929 crash. I set up the Fibonacci retracement in the same way that this one is, and I noted how in 1929 it made it past this retracement right here. It made it past the 50% line, which is, right here. But it did not, it came close, but it did not touch the 0.618. However, with today's action on the stock market, we can see that indeed the Dow Jones did make it past this 0.618. It didn't go way beyond it, and in fact it pulled back down below it, but it did make it past. Now there's two ways to look at this. You can say, well, this structure is still the same, and sometimes fractals, when they repeat, they can be stretched out taller than the original one, or compressed shorter than the original one, or stretched out by time. So maybe it's not really a big deal, and that is a valid argument. On the other hand, we have a lot of evidence showing that in corrections on the Dow Jones, it goes above the 50%, but not above the 0.618. I consider this, even though it was just a small little move, a very big show of strength. Let's go back and look at some of the previous corrections, and I'll show you that this is not normal. So here we are back in 2008. This is the Great Recession, and as you can, I have the Fibonacci pattern set up the same way as I did on the previous one, and as you can see, this measurement here of the retrace, it gets above the 50% level, but it does not get above the 0.618 level. Instead, it turns down and continues its downward movement. So that's just one example. Let's look back a little further. Here we have the 2000 correction, and it does get above that 50% level, the 0.618 level, but this, folks, is not the same structure. So who knows? Maybe we might see something, a peak pattern, but different. Sometimes that can happen with fractals and in structures. The structure will be the same, however, the peak will be different, even though the overall structure is still the same. So maybe that is one possibility. Let's keep moving back. So here's the crash of 1987, and as you can see, it's set up the same way, peak, trough, so it retraces, gets above the 50% level. Let's zoom in there. But it does not get above the 0.618 right here. It crashes, eventually it does get above it, but on that retrace, the one that we're measuring, it does not. And here we are back at 1929. I just touched on a couple of the famous corrections. My point here is that it could potentially be a big deal that it actually made it above the 0.618. So is this a show of strength? Will the Dow Jones continue to move up? I can give you an argument showing that that could potentially be a possibility. So if we took this right here and place the peak here and the bottom right here, what you get is a consolidation right here, and then you get the true peak. So if we go back to today's chart and place the Fibonacci retracement levels in the same way that we did the other one, you can see that we are actually in that same zone above the 1 and below the 1.618 as this was here. So this consolidation. So one argument you can make is that this right here is actually this. So this would essentially B, shoulder, head, shoulder, and then crash. So you can say that we potentially are forming a shoulder to the real peak. So that would be bullish in the short term for the Dow Jones. It would mean it would go up. But now, this, in my opinion, does not sit correctly or doesn't jive with the crypto market. Let's go over to Bitcoin. Here we are in Bitcoin, and here's the initial peak. What I want to establish is this structure here. It looks different, but this structure has repeated many times. So here we have the initial peak, and what I believe is wave 1, wave 2, and there's 3 waves. So wave 3, and it will come to a capitulation point, and this is a pattern B correction, and from there it will do a bounce and move on into its recovery. Now, I'm not just saying that. Let's go back in history, and you can see where I'm pulling that authoritative viewpoint from. So here we are in 2011, and here is the initial peak, and then it crashes, does a retrace, and from that retrace we have 1 bounce, 2 bounce, 3 bounce, and then that bounce at the bottom. Whenever there's a bounce at the bottom, I call this pattern a B pattern. There is an A pattern. Instead of doing a bounce at the bottom, it does a V bottom. So wave 1, wave 2, wave 3, and then a bounce. Let's move on and see if we can validate this with the next correction that took place. I could go further back, but I don't want to spend too much time on this. So here we are in 2013, the initial peak. It comes crashing down. It does 1 bounce, 2 bounce, 3 bounce. This does not do a bounce here. It does a V bottom. This is a pattern A. Let's continue to move on, and I will show you more. All right, here is the next one. So it does an initial peak. This is in 2013, comes crashing down, does a retrace. At that retrace, it does 3 bounces, 1, 2, 3, and at the bottom here, it does a bounce, making this pattern a B pattern since it does a bounce at the bottom. Let's move along. If you enjoy this type of analysis where I dive into chart structures, fractals, and patterns like this, hit that subscribe button because you'll be notified when I put out videos. I put out videos on a regular basis, and if you find value in this, please hit that thumbs up button. It means a lot to me. So here we are at the next correction. This is in 2018. Here's the initial peak, comes crashing down. Again, 1, 2, 3. This is a split wave. I consider this one wave, but you don't have to. This part right here is stretched out by time. It is actually a V bottom. If you pulled this back, it would be a V bottom. It does not do a bounce. In fact, this structure down here, in other videos, I talk about this structure. This structure, it's stretched out here, but this is actually the same structure, structurally similar to the other V bottom. They all have a similar type structure at the bottom, just very small. Let's move along. And that brings us back to where we are today. So again, I use the authority from past corrections to say that this is the initial peak. Here is wave 1. Here's wave 2, and I believe we are working on wave 3. I expect it to hit this line. It could go above it. There are instances where it does that, but it will come to a capitulation point, and since this is a pattern B, pattern A's and B's rotate, it will do a bounce. After that bounce, it will move on into its recovery. Now with Ethereum, I have to make this quick. Don't want this video to go on too long. It is my belief that we are currently working out this structure here. So we're repeating this here. So here there's 3 waves or 3 peaks. Here's one. This is the first one. Doesn't look quite the same, but structurally it's the same. Here's wave 2. I believe we are in the process of working wave 2 out. This, I believe, will eventually turn down to a capitulation point in the same time that probably Bitcoin will. And then as Bitcoin does its bounce, the third wave will take place. That is how I believe there is confluence in this. So XRP, here is where we are today. This is my fractal analysis. XRP does the same corrective structure every single correction, pretty much. Let's go back to the very first one and examine that one. Okay, here we are at the very first correction in XRP, and there are 6, 1, 2, 3, 4, 5, 6, or A, B, C, D, E, F parts of this decline. The first one is A. Sometimes A is not there, and in ones that take place after this, here's B, C, D. There's a unique thing with D. It comes up, drops, and creates this little bowl right here, and then declines into E. E comes up, does the same thing, this bowl right here, drops into F. F is a unique structure too, and that has repeated with every single correction. And as you can see, it has this little wave. It goes up, has this little move up right here, drops here, does this little peak right here, and then works, and then it does this swoop down to a capitulation point before moving on into its next phase. Here we are today. We have A, we have B, we have C, we have that move up and that bowl right there on D. Again, move up, that bowl on E, and then it moves down into F. We are not complete with F yet. This fractal is still playing out. So it moves down, here's that little move up, drops, here's that peak, that one peak, and now I believe we're working on that swoop down to the capitulation point. So the point of all this is that I am trying to establish by history that these patterns, they're repetitive and they're not complete. So let's go back to the Dow Jones. In conclusion, we are not certain on what the Dow Jones is doing, but we do have more certainty with crypto. We know from a long history of what Bitcoin does in corrections, and we can see that Bitcoin has not completed all its waves down. With XRP, XRP is working on its capitulation fractal, but it has not completed it yet. Ethereum is still on wave 2, but I believe it is also not complete its structure on wave 2 or bounce 2. So where does that leave us? If the Dow Jones is going into a bull market, you can only conclude that there would likely be some decoupling between the Dow Jones and crypto. Or possibly more likely, the Dow Jones is also working out a corrective structure and will move down. I am not a financial advisor, so none of this should be construed as investment or financial advice. Thank you for watching this video. I hope you catch my next one. Have a great day, and bye for now.